Okay, here's a new way to invest. We're going to test if it's possible. Can you aggregate news stories over 24 hours and create a sentiment score of companies of interest? Well, machines are already averaging together daily and even weekly news stories to try and create a periodic sentiment with daily scores. Boy, that sounds dull. This is the MoneyMakers. I'm Bruce Whitfield, and tonight I'm joined by Joseph Busha, Managing Director of J.M. Busha Investment Group, and Sasha, Naryshkine, Director of Vestact, to discuss sentiment investing. Why are you laughing?
Stock Twits has been around forever.
Yeah.
That's why I'm laughing.
No, but it takes the soul and the science and the art, mostly the art, out of the investment decisions, surely.
Because there's a wide scope, right? There's artificial intelligence hedge funds, people who now employing mathematicians. You no longer have to be an investment professional, and physicists and computer scientists, and trying to work out what's the best price. So you're writing all these algorithms, but at the end of the day, aren't those all written by humans?
But sometimes just one of its balanced funds is offshore balanced funds is now being run exclusively with AI and computer learning. They announced that this week.
Well, save on costs, Bruce.
But I did say, will the investment team all be fired eventually? And it was a very quick no, because investment teams don't like that sort of thing. Joseph, would you let computers do your work for you?
Not in a chance.
Why not?
Purely because,
they'll
like
do
Just
better
says,
than you,
like you said, everything has been written by man. So people say you can play chess against a computer. They bet it. So neural networks, artificial intelligence, these things came mainly in the 90s. I did neural networks in the 90s at RA. So you say you train this thing, obviously using information of a certain period to say it can then repeat what's happening. But today we've got Twitter. So the machine won't pick what Donald Trump is saying or what President Zuma has done.
But if it's learning, if there's a continuous learning process, and like Watson, it's delving into the web and it's getting the sum total of all human knowledge, false and accurate and true, and somehow it's got to make a decision as to what's rubbish and what's not, which is quite a human trait. But it doesn't have trust issues. It doesn't have preconceptions. It has data. That is terrifyingly powerful.
Certainly, I think if you put it that way, there could be merit in it, that it removes all the sentiments we use, like gold. People still invest in gold based on sentiment.
I think that's your wife saying, "Where are you? You're supposed to be home by this time tonight."
I didn't tell her. I didn't tell her.
You see, next time,
my apologies,
please will you do
Ross,
that?
Yeah. So certainly, I think if you look at it, we still invest on gold purely because we believe gold is the store of value. But over the last few years, gold has delivered nothing.
So a computer would say, you want to buy what? It delivers you no dividend income. It delivers you no real growth. Sure, somebody who bought a Krugerrand in 1968 for $35 has got something worth $1,200 today.
Yeah.
Nice to hold, but nobody keeps their Krugerrands anymore because people steal them.
It suddenly occurred to me I could answer your question this way. So every night when Teslas park in the garage, and there was a major overhaul, I think it was last weekend, right, of the software, the autopilot software, they all relayed data back to the Tesla databases, and they all send the data back to them. So they're learning like 1 million miles driven every single day, which is more than a human will drive in an entire lifetime.
What are they learning, though? I mean, they're learning about road conditions. They're learning about the way the car reacts to the road conditions. Are they learning routes? Are they learning traffic patterns?
I think everything. They're learning absolutely everything, and it makes it safer. So I think from an investment point of view, I think there are many different applications of technology. People who are trading second by second. I once read that Jack Schwager book. You remember Market Wizards? He was the guy who was denied access to South Africa in Cape Town because he didn't have enough pages in his passport. Yeah, he wrote a book about, I think it was a person whose average trading time was somewhere between 7 and 11 seconds. Now this book is about 20 seconds old. So the advent of electronic trading, it's enabled people to transact not in 0.125 cents anymore. You can, and it's based, and they were just trading S&P minis. So to have a machine that's just told these are your parameters and just transact inside of these parameters, it is a human ultimately.
But that's trading. Okay, now does the art of investing not fall out of that.
Yep. So trading is slightly different. Obviously, it's a shorter period, whether intraday or every 2 hours, whatever. Whereas investment is a long-term kind of process.
Or perhaps we don't worry about investments anymore. We just trade the hell out of portfolios.
Capital gain. Capital gain.
Yes. Okay. Sorry.
Yeah, I guess that's what people are looking for. Possibly they're looking more in terms of capital gains than dividends, because I think if you're holding some of the stocks like Anglo American, you're going to get any dividends anytime soon.
Oh, you are.
So
when
is it coming?
Once they settle once they unbundle South Africa, we can have all the shares for ourselves.
Bruce, maybe
courtesy of the Mineral Resources Minister.
A lot of I don't use paper anymore.
Okay.
So I'm just using only electronic material, because you can find filings.
He's young and funky that way.
I see that.
You can find filings everywhere online, and most investor relations websites, they're much better at doing what they were doing maybe 20 years ago, before directors used to have to announce they were selling, right? I mean, so they're all this new information. I think it's how you process the information, because I get the sense that people are too busy on too much information and are looking for when is the next Fed meeting and freaking out about it, whereas in reality people have been freaking out about the Fed since World War II. So
again, how do we use this world, this artificial world, this world of artificial intelligence to enhance the investment process? Because clearly, if you can take out a lot of the admin and a lot of the PT, the drudge work of sitting in the days before spreadsheets with a pen and paper and trying to figure out what 10 cents on every widget additional
that's
price
usually
will
helpful.
do. There you can make instant calculations. You no longer have to sit with a slide rule and do those sums.
There's lots of free information on websites like Google Finance, in which they've even got a stock screener. So you can say, I want this stock that falls inside of this earnings multiple, that share price hasn't done X. You can use tons of different parameters. I think it was Buffett who said every single annual report is available to everyone, but not everyone will read 6 a day.
And that's the big difference.
I think so.
And that then comes down to his so he has a guy who's built a career, Joseph, off the back of doing stuff that other people aren't prepared to do. There's still room for human endeavor then in the investment space.
No, certainly. I think you look obviously the contrarian and people who want to do things differently. As you put it, we all basically trade on information. Whatever we do, we basically use the information. It's how fast you get the information, and it's such as how you apply the information. It's like a mathematics book or any book. You read an accounting book, so it's the interpretation, inference, the application of that information that is important.
When results come out, and within a nanosecond of results coming out, a share price can move.
Look at YOLO Wolf, Bruce.
Let's look at that. In terms of a 10 percentage point move in either direction, simply because it misses an expectation on a single line item. And 2 or 3 days later, things have calmed down usually, but it's that knee-jerk reaction which creates the opportunity for somebody with a deeper bias, perhaps.
So the difference is sentiment, and then there's expectation. So we all sit down and say, what is they're likely to deliver? What are they going to do? So you take your decision based on that, and obviously once the event has happened, then obviously it's kind of your real what has been traded. But if you look at the studies, one of the biggest challenges with the studies is that we take closing prices to say this is where the stock is moving. Your stochastic processes where we say this price moves, stochastic processes, right? But it's not, because during the whole day it's almost like a scatter graph, because the prices will be everywhere, and then at the end of the day we average. Like just towards 4:30 we say this is the closing price, and then you use that to be able to develop a model. So how accurate is that?
No, I mean, it's more accurate than the dartboard they use in the Vestact office. They've got pictures of CEOs, 1 to 20, and they chuck a dart. And that's
we bring out the chimpanzee once a year. If I could add one last thing here, Bruce. The most watched number globally, most traded on number, most hyped number is the non-farm payrolls number, right? So that happens once a month. There are octoboxes all over your screen. It's great entertainment. Who goes back and looks at the revised numbers?
Nobody. They're too busy worrying about the next number.
Exactly.
And the revised number is the accurate number.
Exactly.
Yeah. Okay, so sitting in South Africa today, one wonders whether an artificial intelligence-based investing system would be buying South African banks right now. Dividend yields of close to 7%. Historic, of course, but what other dividend yield do you want to look at?
Well, the one, if you can tell me what the one's going to be likely next year.
But we don't know, and that's why we look at historic numbers. Would artificial intelligence be investing in South Africa right now? South Africa-focused companies that have been bludgeoned lower this year?
I had a look at it. So in dollar terms, we're probably off 20% on the all share over 3 years. Now, if you bear in mind inflation over the same period is probably what, like, accounts for another 15% less. Okay, so you're down a third in dollar terms.
Yeah.
If you, like the PIC, have a mandate to buy every month of the last 36 months, okay, think about what the long-term implications are for the people of the Government Employees Pension Fund if the high road scenario turns out to be true, because it would have been a fantastic period in South African history.
It would have.
If the low road scenario is, then your 7% dividend yield is likely to be
completely. But we are, by nature, we hope optimists, and we believe that ultimately common sense prevails, and hopefully it does. And that this could be, and there's an investment house that I was told off the record is now putting about buy recommendations to its clients and saying it's time to start topping up investments, because we're back to the dark days of P.W. Botha in terms of sentiment, in terms of where the economy finds itself, and all this needs is a spark, a catalyst for good, for sentiment to move, and that's why I ask you, Joseph Busha.
So you've got no one voice, and certainly the.
But you have only one voice. What do you?
Oh, I'm talking about as a country. so the variables are just too many, and I agree with you. Then you could basically trade either on rumor, the sentiment or the information that come through. So you need to be able to verify whether it's correct or not. Okay? So artificial trading and all the systems might reduce the cost in the long run in terms of obviously trading costs, and hopefully improve on the returns on the portfolios.
Or you can take a value-based approach and
buy. Or you could vote for artificial intelligent politicians.
Oh. I don't care whether it's artificial or if it's real. I just take a little bit of intelligence. Sasha, would you be buying South Africa right now?
Well, we are, naturally.
You are.
Every day, but it's specific names.
Yeah, it is like picking terms.
I think Woolies is really worth a look.
Did you pick it in January?
I did.
And how much are you down so far this year?
I don't know, quite a lot.
23%.
About that. Yeah. But you're still buying it?
Yeah.
Okay. Joseph? Because you also picked Woolies at the beginning of this year.
Yes, certainly. Woolies was a fantastic stock. It has proved us wrong. But I've been buying in Vestact, which has done well for me after the Brexit. But now I think Togelson and even Pick n Pay looks attractive.
And Sunint, eh?
Sunint.
No, I wouldn't buy it. No, I wouldn't want to own those stocks. But I'm just saying it's trading at a 13-year low.
Yep.
Yeah, we could continue trading at a 13-year low. And as sentiment improves. That was Sasha Naryshkine, Director at Vestact, and Joseph Busha, Managing Director of J.M. Busha Investment Group. Is it time to buy South Africa? There is an element which suggests, before sentiment turns for the better, and it might, that you should be putting more money into the market. There is some skepticism, however, some fear, however. But that's where money is made and lost. Till next time on the Moneymakers, good night.